Good Tuesday afternoon, or I think it's Tuesday. I mean, it's been really busy the last couple of days. I'm pretty sure this is Tuesday. How's everybody doing? Welcome, welcome, welcome. Please make sure you smash that like, subscribe, all that good stuff. Boy, I guess the markets really like that CPI print this morning, even though inflation is moving higher. It is moving higher. Basically, it looks like, it was in line with expectations, which was higher, and maybe the market's looking at it like it wasn't worse. So that seems to be, excuse me, right now, I'm getting something from my VIX broker buddy. It looks like maybe it just wasn't as bad as some people had thought. So here we are, all-time records. S&Ps are up 56 points. The NASI is up 250 points. The Dow is up 450 points. Yeah, there's a lot of complacency out there. Thank you, David, Steve. Thank you, everybody. One thing that is not up, although it's not down as much as it was earlier, is gold. But we know what gold has done recently, all-time highs, taking a little breather now. So I thought it really, really important to talk about gold and gold's relationship with the dollar and with interest rates, since interest rates are front and center and we can all expect a cut next month, even though inflation was higher today. In fact, let's bring this up right now to see what the expectations are here. Let me bring this into the screen. Here is live what the CME FedWatch tool is saying right now. And you can see that the expectations for a rate cut actually moved higher today, even with higher inflation. Yesterday, there was an 86% probability of a cut at the September meeting. That is now a 94% probability. Okay, don't forget about always looking at that if you want, that CME FedWatch tool, because that is a great place to find out what is going on in the market. What is the market pricing in? Folks that are in OpVol, if you can let me know while we're talking here. Looks like we're really close, really on the cusp of potentially getting filled in Reddit. So let me know. All right. The dollar, gold, rates, how do they all work together? Okay. So traditionally, gold and the dollar have an inverse relationship. Okay. So when the price of gold is stronger, that's typically when the dollar is weaker, and vice versa. All right. And that's partly because gold is priced in US dollars on the global market. So changes to the dollar impacts the price of gold. So typically, again, when the dollar is strong, gold becomes more expensive for buyers purchasing it in other currencies. And that means that a stronger dollar means it takes fewer dollars to buy the same amount of gold. Okay. Gold becomes less attractive as a non-yielding asset. What's a non-yielding asset, right? There's no interest rate to it. There's no dividend. Okay. And it becomes less attractive when the dollar strengthens and when rates rise. Okay. And that's because when rates are going up, when rates are higher, it makes not easy for me to say, dollar denominated assets more appealing to investors to seek higher returns. Okay. Now, any of you that are maybe old enough to remember, or you know about this just from an econ class or just from knowing it because of the markets, the relationship of the dollar and gold was also shaped by the gold standard, okay, which was up until the 70s a system that tied the value of the dollar to gold. Okay, we are off that now for the last 50 plus years. Also, gold is still one of those safe haven assets. So when the you know what hits the fan, when there's uncertainty, whatever that uncertainty is, okay, gold becomes more appealing when the dollar is weak. Here is a chart, here is a relationship here over the last 5 years between gold, which obviously that is this chart right here, and the dollar. Okay. The value of the dollar over time typically doesn't fluctuate a lot. We do see, in a shorter time frame, we know that recently the dollar's just been hammered. But if you look over time, not that big of, of a move. But you can see the convergence, or I should say divergence, between gold and the dollar over the last 5 years, especially over the last year or so, as gold has just catapulted to all time highs. Okay. The dollar isn't the only thing, though, that affects the price of gold. Okay. Got to look at inflation. We got to look at interest rates. We have to look at monetary policy and also supply and demand, just like anything else. Now, if you think about over the last year or so, 18 months, okay, from a supply and demand standpoint, we're going to get into this. The demand for gold has been off the charts, especially from other central banks around the world. Okay. What have we seen about inflation? We have seen really sticky inflation. We have seen rates level, but level at higher levels. And the monetary policy, until maybe just now coming up, has been one that, you know what? Rates are holding. Rates are holding. Okay. But there's always exceptions to the rule, right? That adage that we talk about often, past performance is not necessarily indicative of future performance, right? Doesn't mean that correlation always holds. When it doesn't, there's a reason. And we actually saw that over the last several years, 2023 and 2024, where both gold and the dollar rose significantly. Okay. What caused that? Well, again, it's that uncertainty, right? When there's uncertainty, people flock to the safe havens, and historically gold and the dollar has been a safe haven. Though, the dollar not so much right now. I have no doubts that it will be again, but not so much right now. But what happened in 23 and 24 is lots of geopolitical tensions, Russia, Ukraine, Middle East instability. So that drove a safe haven demand for both of these. Like I just alluded to, and in another time I can give you all the statistics, or you can look it up. Central bank gold purchasing, especially coming out of China, Russia, other parts of the world, had never been higher. They reached historic levels, and then sticky inflation. Okay, so gold is known or thought of as a hedge against inflation. Okay, and there is something out there called the inflation hedge theory. Okay, and what that is, in the reason why gold is effectively a hedge against inflation, okay, especially when the Fed's not really acting or doing anything. It's attractive when market participants anticipate rising inflation. So pretty much where we've been over the last year, even right now, but expect the Fed to remain accommodative, or right now, potentially implement rate cuts. Okay, so rate hikes, again, not good for gold historically. Hasn't mattered over the last year and a half, 2 years. But now that there is some probability, as we just went through on the CME FedWatch tool, probability finally of a cut, maybe more coming up. Maybe that's some of the weakness now, some of the softness that we're seeing in the price of gold just over the last week, over the last several days. Also, you got to look at it and say, hey, gold has rallied so much, it's at all-time highs. Maybe it's taken a little bit of a breather. Okay, does that make sense? Does that make sense? Looking at GLD today, pretty much unchanged. But as we all know, as we have all experienced, okay, what have we done in GLD over the last, I mean, guess I could probably call it 6 months, maybe even a little bit more. We have bought the dips. And if you hear me on when I'm a talking head on Fox Business or Schwab or whatever it is, talk about it all the time. That GLD gold is still in a buy the dip pattern. That might change. That could change, if the Fed really gets aggressive cutting rates. But, if I go back to even just this year, and I don't know, can look, we've had maybe what everybody can probably look or correct me, 4 or 5, maybe 6 GLD positions, and everyone has been put on a dip. Everyone has been put on a dip. Okay. At some point, that pattern is going to stop. For right now, it's still in place. The two things that I talk about regularly when I'm asked about commodities on the networks are gold's a buy the dip and oil is a sell the rip. Sell the rip meaning rather than buying on a downward move, you sell on an upward move. Okay, so the inflation hedge theory is absolutely correlated to gold and what the long-standing relationship has been. Okay, now what's going to happen next? What can we expect? I mean, I don't know. I can only try and discuss and explain what is out there right now, and if we see that relationship, the inverse relationship between gold and the dollar, start coming back in line. Okay, so there's no question that gold is, as we discussed, that hedge against economic uncertainty, against geopolitical uncertainty. My book, okay, even though economic uncertainty maybe has ebbed a little bit, I think we still have a lot of economic uncertainty. For one, personally, I believe that we are going to see some pretty negative effects on the back half of the year due to tariffs. Hasn't played out yet. That's what I am thinking. So economically, that's number one. Number two, geopolitical risks. Okay, one of the reasons that we have seen gold actually decline over the last week, why do you think, from a geopolitical standpoint? What has happened over the last week, which could change dramatically in the next couple days? Anybody? Come on, no wrong answers. I'm not going to bite your head off. There we go, Dave. Yes. Yes, the market is looking at this as the talks between the US and Russia, Trump and Putin, as okay, maybe there's a window here for things to de escalate, things to get better. Okay. So the market's looking at that. I can guarantee you that if those talks happen, which is still very much in my mind a question mark, I believe they're supposed to happen or they're supposed to meet in Alaska on Friday. And if President Trump comes out of there saying, I tried, but Putin doesn't want peace, or, if he comes out of there and there is no either resolution or a pathway to resolution, what do you think is going to happen to the price of gold real quickly? Yep. We will see a quick little spike higher. No doubt about it. No doubt about it. But let's put Russia, Ukraine aside for now. To the moon, Alice Bear. Love it, man. Love it, love it, love it. You know what? Maybe, and I hate to say that we're going to replace Thor, but maybe on a guest appearance every now and then, we'll have a Ralph Cramden scene with a to the moon. How about that? We've gone from Groucho Marx to the Hulk to Thor. Maybe we'll have to bring in Jackie Gleason and Ralph Cramden. That would be awesome. So, anyway, besides Russia, Ukraine, now that the president once again extended trade talks, tariff talks with China out another 3 months, well, that uncertainty is just going to linger. Okay. If you go back to Liberation Day, okay, and look what happened in that time span when, oh my God, everybody thought the world was falling apart, right? The equity markets tanked, tariffs started hitting, blah, 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 blah. People were running for the hills, running for protection, running for safe haven assets. Gold surged. Now that's just, sure, that could be a one-off, but that reinforces the point of when the what hits the fan, that's one of the assets that people run to. Okay. So is this relationship between gold and the dollar normalizing a little bit? Well, you're going to have to wait a minute till we talk about it. Real super easy. Thor was tired today. Thor was really tired when he got up this morning and couldn't think real well. Jeff must have had him working out all night. Jeff probably ran 20 miles last night. He probably had Thor with him. But real easy word today for the wheel. Just simple gold. And the banks are rocketing. Goldman Sachs is up 3.5%. Another all-time high. JP Morgan is chasing its all-time high here. Wow. Just looking across the board here. Okay, give it another minute here. AU. Gregory, I would take that. I would definitely take that for the wheel. That's a good one. In fact, I have a friend. This is honest to God true story. I have a friend. His name is Larry Goldwater. Okay, his license plate is that. That is his license plate, which I think is pretty cool. Did you click something? Picture is out, Ty. I don't think the picture is out. Everybody else, I see it. Everybody else still see the screen here? Okay. All right. So back to our discussion here. Is this relationship between gold and the dollar normalizing? And as the Fed is maybe in this transition now from its tightening cycle and holding rates steady to potential easing, okay, that is typically the time where we would see this relationship come back into line. But we got to remember things that we just talked about: global uncertainties, trade disputes, geopolitical conflicts. Okay. If they just rear their ugly heads or continue to hang out there, that will be an overhang on this relationship, on the historical correlation between the two. So we talked a lot about gold and the dollar. How about gold and interest rates? Okay. And could be high or low interest rates. When you say the stock is taking a breather, does that mean the market makers don't want to make a profit that day, or is a reflection of institutional buying? Connie, was I when I said taking a breather, I think I was referring to the price of gold, right? Price of gold has nothing to do with the market makers. Price of gold is driven by all of the factors we talked about: liquidity, geopolitical events. There are not market makers in a pit trading gold moving the market. There are market makers trading gold futures, trading gold options. They have no bearing whatsoever on the price or direction. Okay, so yes, Kevin, you are correct. Traditionally, again, historically, inverse relationship. Higher rates, typically not good for gold, vice versa. Okay, historically, gold prices rise when interest rates are falling, and vice versa. Higher rates, as we spoke about before, higher rates means people will shift out of something that does not have interest or a dividend and start putting their money elsewhere, bonds, for instance. Okay, that didn't happen though. That didn't happen over the last 6, 8 months or so. So, this year we have seen gold surge to record highs, even with relatively high rates. So, again, this traditional inverse relationship really hasn't happened this year. Okay. And just like the dollar gold relationship, interest rates and gold, there's a certain relationship based on the impact of Fed policy. Okay. Fed policy absolutely is a significant contributor to gold prices. Okay. With what's about to happen right now, a potential shift towards a more, when we say accommodative is the same as dovish, typically associated with cuts. Okay. If there is a restrictive policy, that is considered hawkish or a rise in interest rates. So when you hear the Fed is hawkish, that means they're looking to raise rates. When you hear the Fed is dovish, that means they're looking to lower rates. Okay, so a shift towards a more accommodative policy, which is where we may be going right now, that tends to weaken the dollar, reduce real interest rates, which supports higher gold prices. Does that make sense? Yeah, Kevin, record amounts of the Chinese and Russian central banks buying gold. Okay. And here's where we are right now. This is where we are right now. Maybe this changes in a week, a month. This is where we are right now. The dollar's been awful. It has come back off its lows a little bit, but the dollar has been weakening, which makes gold cheaper for foreign buyers. Okay. But it also is a signal that there's concerns about the economy. Inflation concerns, that hasn't gone away. In fact, just this morning, the latest CPI report, inflation's going higher. It was expected, but it's going higher. Okay. Geopolitical uncertainty. We'll see what happens Friday. And of course, central bank demand, as Kevin just noted also. Okay. So could gold prices fall? Don't know for sure. But these are the things. These are the things to be watching for over the next, period of time, weeks, days, months, whatever it is, that would help, help push gold prices lower. Lower inflation or cooling inflation, easing geopolitical attention, lower investor demand. Okay, before we get to the wheel, everybody, Mike Shore is doing a live webinar tonight. I think we just posted the link up in the chat. He will be talking about his room and his AI enhanced trading system that he just added in to the short-term room. Okay, thank you. The link is pinned in the chat. That is awesome. So if you're in Charlie's AI room and you love the AI format, Mike is adding AI into his room. If you're not in AI or if you're not in Mike's room, want to check it out? He is killing it. He is killing it. Mike is up over 200% for 3 straight years. So the link is in the chat. You can all look for it tonight. We know Thor had gold on his mind this morning, and we are going to go to the wheel. It is wheel time. All right, let's give it a rock and roll here. Winner today, it's going to be a Steven, it looks like, or is it going to be a Sylvia? It's going to be Steven. Steven, are you in the house? Thank you, Paul. Yes, Mike is a fantastic trader. Besides being a fantastic human being, he is a fantastic trader. And Steven is here. All righty. I think you know the deal, right, Steven? We'll post up the email address just in case. There it is right there. All right, everyone. Mike Shore tonight. All right. If anybody is interested, we'd love to see you there. And boy, the trade just continues. We've been busy. We've been busy. That is a good thing. Thank you, Paul. Mash that like button, roomies. Love it. Love it. Love it. You are welcome, Elisa. Gold is a good thing. It's a very pressing topic right now. This is a very, very pressing topic right now. So, all right, everybody. Appreciate your time as always. Have a great rest of your Tuesday. See you tomorrow.